the markets around the globe were very concerned about what's happening with China. If you were to see a significant lockdown in China, if you were to see COVID break out there in a major way, I guess that would change the trajectory of global growth, change the trajectory of inflation and commodities prices. Would that keep the Fed at bay, at least temporarily?
I don't think so, for a couple of reasons. One is, that is something that is outside of their control and could move back and forth relatively quickly. Secondly, recognize that while a dramatic slowing in China would certainly have an impact on demand for commodities, a shutdown would also have an impact on the supply chain. And one of the things that has been driving inflation is, in fact, supply chain challenges. So I think, ongoing uncertainty in China is a bit of a double-edged sword from the standpoint of the Fed. Potentially easing inflation, maybe driving towards a global recession, which many people have been concerned about. But at the same time, creating restrictions in supply that could feed into the inflationary pressures that they've been dealing with. So Roger, I think it's a much more complex and nuanced story.
Yeah, that makes sense. The counter argument in the markets has been that the Fed is looking at old data, that this is outdated, that they're always late, late to get started, late to get out of things. What does the Fed see? What does the Fed know that maybe is beyond that narrative?
A couple of things. One is obviously they have what I think still is the best model of the U.S. economy. Now, obviously, models are imperfect because they are also backward-looking. But I think the Fed also is very focused on managing inflation expectations and keeping those under control. That is obviously a forward-looking measure. They are pleased with where they, I think, see inflation expectations to be, but they're also concerned about the possibility that inflation remains high leads to a cycle of inflation expectations that pick up. The final thing I think the market really is ignoring is that even as inflation comes down, it comes down from a very high level. And so headline inflation we've seen at 6, even 7% occasionally, takes some time to get back down to 2%. And I think that's where the market and the Fed might be at odds. Yes, the data is backward looking, but the Fed's been clear until they are sure that we're going to 2% over a reasonable time frame. I think perhaps their antenna are up a little bit more than the market. And so I think that's where the disconnect might be.
Yeah, that makes sense. But just back to something you just said, the idea that models are outdated because they're backward looking. When we hear from people who are in the ground, from CEOs, from those who have industries that are getting hurt by these issues, they say the Fed isn't looking at the data that they're seeing, the real-time data. What's your counter argument to that?
I think the Fed is looking at a range of data sources. And so, yes, they have their official ways of gathering qualitative and anecdotal information. It's called the Beige Book. They published that after a period of time. They have various committees and groups that they meet with. They go out and talk to the public. So I think they're hearing that for sure, but they're also hearing from consumers that inflation still seems to be quite a problem. And rents still are relatively high, and there's a risk that they go up. Consumers are comparing what it costs to fill up a basket in the grocery store this year versus last year. And so they're also hearing that on the ground, inflation is a clear and present danger for average citizens. And so let's be clear, there are complex cross currents right now that make the job very difficult. But I think what the Fed is primarily focused on, not ignoring the other data, primarily focused on the fact that inflation is still there. By the way, the fact that there are these cross currents, I think that gives legitimacy and credence to the Fed stepping down its campaign from 75 basis points to 50 basis points, maybe to 25, and indeed eventually ending it. So I think the market is perhaps not listening to the Fed saying, we're getting close to the end of the campaign of raising rates. We will hold them for a period of time. And you heard John Williams for the first time talk about the possibility of reducing rates, not 2023, but early 2024. So I think the Fed is trying to signal, we hear you. It's more complex than just one side of the story because inflation hasn't gone away, even though higher rates are clearly taking a toll in certain sectors and certain industries.